It's been a pretty great earnings season so far. You know, as of Friday, as you pointed out, 53% of the S&P 500 had reported, and 83% of the companies are beating estimates, which is a big number. Probably even more encouraging is the fact that analysts are upping their estimates for future quarters, which is rare, because usually in the second month of a quarter, which we're in right now, they're usually cutting estimates. So yes, investors are certainly happy with earnings season right now.
Has there been anything that stood out to you so far in the first half of earnings season that really has you either optimistic or a bit more cautious on markets at record highs?
Well, I am, and you noted earlier in the program how well the small cap space has done, and I think it may have gotten a little ahead of itself. I think from more of a macro picture, I would overweight large cap growth stocks and underweight small cap value stocks, partly because of that valuation, also partly because the Fed's going to keep printing money here, and so that's going to be pulling the dollar down, which should help big cap multinationals.
So if it's those big cap multinationals, it's been a big debate among guests we've had on our air over the past several weeks now at this point, this idea that many favor that pro-cyclicality, the COVID recovery trade in small and mid cap stocks. If you're going back towards large cap names, what exactly in large cap tempts you at this level? Many argue that the stocks at the high end of the technology and communication services sectors are, again, overvalued at this stage.
Yeah, technology, not hugely in favor right now. My three favorite sectors are financials, energy, and materials. And when I'm looking at sectors that I like, I look not only at visible earnings growth, but also valuation and technicals. And you alluded to it earlier in the program that the energy space seems to be firming up, which is good. So those are three areas I'd be looking at right now.
If you are, we're also talking about the reflation trade these days. There's been a lot of mention in the financial press these days about this idea that inflation may be picking up again. We have the bond market signaling that inflation could be at the highest levels that we had since pre-pandemic. Is this normalization in prices, this normalization in inflation expectations, something to worry about or embrace?
Well, I think right now it's probably a good thing because that's what the Fed is looking for. The Fed's looking for not only full employment but 2% inflation, and so that right now that's probably a good thing. Now you can always get too much of a good thing, but I think at this stage we're pretty far away from that.
Shepard Smith here. Thanks for watching CNBC on YouTube.